Trading confidence. How to build it slowly and never lose it again. Why do some traders bounce back stronger while others quit forever? How can two people face the same loss, but one becomes better and the other walks away defeated? Here's the truth. Confidence in trading is not luck. It's not hype. It's a skill built day by day, decision by decision. And once you know how to build it the right way, you'll never lose it again. In this video, I'll show you exactly how confidence works inside the mind of a trader. You'll learn how to build confidence slowly, one smart action at a time, how to protect your confidence when you're losing, and how to bounce back stronger after every drawdown. No unrealistic promises, no motivational noise, just a roadmap for becoming the most confident version of yourself in the markets. What is trading confidence? So let's break down a question every trader must understand. What exactly is trading confidence? Trading confidence is not ego. It's not hype. It's not pretending you're a master of the markets. Real confidence is simple. It's trust in your process. It's knowing that even if this trade loses, your strategy still works long-term. It's showing up with clarity, patience, and discipline, not just excitement. Confidence isn't built from winning. Confidence comes from repeated, correct actions. You followed your plan. You protected your capital. You executed without hesitation. You honored your rules. Every right decision, even in a losing trade, adds to your confidence bank. Because confidence is a formula. Skill plus discipline plus emotional control. You grow skill by learning the market. You grow discipline by sticking to your plan. You grow emotional control by managing risk and staying calm. So remember this. Confidence is earned from your habits, not your profits. And once you build it like a true professional, no loss can ever take it away. Why most traders lose confidence? So if confidence is so important, why do most traders lose it so fast? Reason number one, over-leveraging. Many traders gamble with oversized positions, hoping for a big win. And the moment the market goes against them, panic takes over. Confidence disappears because risk was never under control. Reason number two, chasing losses. When traders take revenge on the market, trying to fix a mistake with a bigger mistake, that creates psychological damage. Their brain starts to associate trading with fear, stress, and regret. And reason number three, unrealistic expectations. Social media shows people flipping $50 accounts into $50,000. It looks easy, so when reality hits, they feel like failures. They expect fast success instead of slow mastery. And reason number four, identity tied to every trade. One win, they feel like a genius. One loss, they feel worthless. When a trader's self-esteem rises and falls with every candle, confidence becomes fragile. It can break at any moment. I once knew a trader with a solid strategy, proven, tested, profitable. But when he took 3 losses in a row, he threw the rules away. His emotions took control. It wasn't the strategy that failed him, it was his psychology. A good system can't save a trader with a bad mindset. So if you've ever felt your confidence crumble, you're not alone. It's not the market destroying you. It's the bad habits that weaken you. So how do you actually build trading confidence that lasts? It starts with small, consistent wins. Most traders obsess over profits. They chase big outcomes and ignore the small actions that actually lead to success.
But professionals do the opposite. They focus on process goals, things they can control. Did I follow my plan? Did I keep my risk under control? Did I execute my entry without hesitation? These actions build confidence because you're stacking proof that you can do this. When you win by following your rules, that counts. When you take a loss but executed correctly, that still counts. You are not trying to win one big day. You are trying to win the day, every day. Each correct decision is like a deposit into your confidence bank. It compounds. Small progress, repeated consistently, creates a powerful trader. As the saying goes, if you win the day, you win the month. If you win the month, you shape the trader you become. So don't chase the big moments. Dominate the small ones. Your consistency today becomes your confidence tomorrow. Routine and structure build confidence. So if small consistent wins are the foundation, routine and structure are the walls that protect your confidence. Confidence grows when randomness disappears. The more structure you have, the less emotion controls you. Start with a morning routine that prepares your mind. A little movement, a little clarity, and zero rush. Next, your trading journal. Writing your emotions and decisions builds self-awareness. It exposes patterns, both the good and the dangerous ones. Then comes your trading checklist, your shield against mistakes. Before entering a trade, ask, did I define my risk? Did I wait for confirmation? And after the trade, did I journal how I felt and what I learned? These simple steps reduce stress because confidence is knowing you didn't just wing it. You were intentional. When you have structure, every action has purpose. And when every action has purpose, your confidence becomes unshakable. Emotional discipline. We've talked about structure. Now let's talk about the most powerful element of confidence, emotional discipline. Confidence is not about being fearless. It's about controlling your emotions when the market tests you. Because the truth is, many traders lose confidence after a loss, but others lose it after a win. Don't celebrate wins too much, because that creates overconfidence. You start risking more. You break rules. You think you're unstoppable, and the market will humble you fast. Don't punish yourself on losses, because that creates self-doubt. Your hands start shaking at the next opportunity. You hesitate, and your strategy doesn't get a fair chance. You must have a healthy detachment from money. The goal is not to feel nothing. The goal is to feel balanced. So remember this. You don't need to be right often, only right enough. You rise above the chart when you rise above your emotions. Stay calm when you win, stay calm when you lose. That's how confidence stays strong. Risk management equals confidence protection. And now, the shield of confidence, risk management. Think of risk management as emotional insurance. It doesn't just protect your account, it protects your mindset. Position sizing equals peace of mind. When your risk is small, you can think clearly. You can execute your plan without fear. Acceptable loss equals no panic. If losing a trade won't hurt your confidence, you can trade with patience. You can wait for quality setups instead of forcing trades. And most importantly, avoid trades that threaten your confidence. No random entries, no revenge trades, no this better work trades. The goal is not to avoid losing. The goal is to avoid damage to the trader. Because here's something every pro understands. Confidence breaks faster than accounts do. Protect your confidence first, and your account will follow. Controlled risk leads to controlled emotions, and controlled emotions lead to unshakable confidence. Rebuilding confidence after a drawdown. Confidence isn't just built. Sometimes it must be rebuilt. When you hit a losing streak or a major setback, the biggest mistake is to keep trading while emotional. When your mind is not stable, your decisions won't be either. So first, stop trading. Take a breath, step back, reset. Next, reduce your position size temporarily. Trade smaller while rebuilding your rhythm. Smaller risk means smaller stress. Smaller stress means smarter decisions. Then review your trades honestly, not with shame. Ask yourself, was it the market or was it me
Ignoring my rules? Honest reflection turns losses into lessons. Finally, collect small wins as fast as possible. Tiny successes rebuild belief. They remind your mind, yes, I still know how to trade. Because you don't rebuild confidence with words, you rebuild it with actions. When you recover slowly and correctly, you come back stronger than before. Tools to maintain confidence long-term. So how do you make sure your confidence doesn't fade? You maintain it intentionally. There are 3 tools every confident trader must use. 1. Journals, trade reviews, and a risk checklist. These keep your mind honest. They show your progress. They filter out emotional decisions and reinforce discipline. 2. Community or mentorship support. Trading alone is hard. Having someone to talk to, learn from, or be accountable to can prevent emotional decisions and remind you you're not the only one fighting the same battles. 3. A balanced life. Confidence weakens when the trader is exhausted. Good sleep, exercise, relaxation, time away from screens. A healthy trader makes healthy decisions. Because confidence doesn't only live in your charts. Confidence thrives when the whole trader is healthy. These tools keep your mind sharp, your emotions steady, and your confidence strong, today and always. So now the real question is, are you willing to build confidence slowly? Not chasing hype, not rushing success, but growing into the trader you're meant to be. If you are, then take action right now. Comment below, I choose process over profit. By typing it, you're making a commitment to yourself and to the kind of trader you're building. And if this video helped you understand what real trading confidence looks like, hit like. It tells YouTube this is valuable for others too. Subscribe for more lessons on mindset, discipline, and strategy. Because confidence doesn't come from winning every trade. It comes from knowing that no single trade can destroy you.